Hello everyone. Today I have come up with an interesting video wherein we are going to discuss a particular strategy, dividend reinvesting strategy in stocks. So what is dividend reinvesting? You must have heard about this in mutual funds. So let us discuss a brief about mutual funds and then directly get into the stocks so that you are familiar with that. So in mutual funds, there are mainly three types of mutual funds as far as the dividends are concerned. One is growth, one is IDCW, another is dividend reinvesting. So what is this IDCW? So income distribution cum capital withdrawal plan. So in that, what happens is that whatever the company, the portfolio of stocks the fund is having, if you opt this plan IDCW, then they will give out the dividends to your account. And once they give out the dividends to your account, when the company which is underlying in the mutual fund declares a dividend, then in that case, the equivalent amount will be deducted from your NAV and the NAV value goes down. So this is one way. Second way is growth investing, wherein by default, whatever dividend the underlying companies in the mutual fund is giving, they are reinvesting it back into the fund, and there is no change in the NAV. The NAV remains the same, and there will be an appreciation in the NAV based on the reinvesting of the dividends into the fund. And the third one is dividend reinvesting. So in this, what happens, they will definitely reinvest the dividend back into the fund without paying it out. But in that case, the number of units you hold, that will increase and the basic value of the NAV goes down. So last two cases are fine enough. As per me, you should always go for growth plan. The first option, IDCW, is not recommended because it kills the compounding effect of reinvesting back into the business or to the mutual fund. So mutual fund, end of the day, if it is equity mutual fund, then it holds a number of stocks under its portfolio, and those are all businesses as per me. You should allow those businesses to compound their wealth by reinvesting money back into the fund. So if this is not happening, then you may get some payout, monthly payout or quarterly payout based on the dividends they are distributing, but it will not help you compound the money in the way it should have been. Now let's get into the stock. So in the stocks, if you are holding a 10 lakhs worth portfolio of stocks, and some stocks will not be giving dividends, some stocks will be giving nominal dividends, and some stocks will be giving high dividends. So average, let us take a 1% dividend yield. Dividend yield is nothing but the amount of dividend the company is paying out per rupee invested in that stock. So say a 1% dividend yield over a 10 lakh portfolio is like 10,000 rupees. So 10,000 rupees you are getting. So normally what I have seen is that whatever you get, you are just spending it out for your daily needs or expenses. So it is not reflecting back into your investments. What I suggest in my dividend reinvesting strategy for stocks is that you use that amount, say whether it is 5,000, 10,000, 15,000, 20,000, or even 1 lakh based on your portfolio of stocks and the dividend yield. Use it back and put it back into the market itself. Again, the effect of compounding. So you can either put it back into the stocks wherein you find some of the stocks in your portfolio is undervalued, then average that stock using this dividend amount without putting extra amount from your pocket, because this is the money you got from the market, you are putting it back into the market. So you can average the stocks. Otherwise, you find some new stocks which is undervalued and it's time for you to invest, then add your own money and also put this extra dividend and buy that stock. Otherwise, use this money for stepping up or boosting up or topping up your mutual fund SIP monthly. So these are the ways by which you can utilize the money and invest it back into the market, and this will give compounded returns for you going forward. So I have experienced that compounding effect. I have personally understood that to the core based on my own investments. That is why I am very clear and keeping on telling you about the magic of compounding. So you may not believe this, but believe me guys, if you are reinvesting back the dividends back into the market in either of the three ways, then I'm sure that you will be getting much higher returns than you would have got without that reinvestment strategy. And please note that the expenses you have to meet by other sources, like whatever you have allocated from your income, say from your salary or something like that. And you have to be very clear that don't take out, and maximum you don't try to take out the money you are getting or yielding from the stocks or the profits you are getting from the stocks. You should invest that back into the market so that you get a compounded effect and you generate enormous wealth going forward. So hope this session was informative for you. If you have any comments, please feel free to comment in the below comment box. Hope you like the video. If you like the video, please like the video and also subscribe. Please share the word to your friends and family as well, so that they also participate in our value investing series, and this may help them compound their wealth and help them in their wealth generating journey. Hope you like this video. See you in next video. Till then, happy investing.